Hi, everyone. Good evening. I'm so excited to have all of you join us this evening for this maiden edition. And I can already see four of you logged in. If you can hear me clearly, I want you to drop a message in the chat. Let me know you can hear me. Kindly drop a message in the chat. Let me know where you are joining us from. Very soon, our speaker is already behind the scenes. I'll bring him up on the screen in a minute. So, Mr. Ennis, I'll be bringing you up soon. But I want to be sure you can all hear me. If you can hear me, kindly drop a message in the chat. Can anyone hear me? Okay, Ezra says loud and clear. Beautiful. That's good. Can I get some more? Okay. Yoshana says, please, we can hear you. Thank you for that. Okay. Okay, beautiful. So today we have 1 hour 30 minutes for our meeting. Susie said you can be okay. Thank you so much. Beautiful. So I'm so excited about this edition. This is the first time we are having this particular meeting. Thank you so much, Ajwa. Ajwa says she can hear me as well. Let's keep them coming. Beautiful. I want you to share the link on your status right now. Share it with a friend. And when you're done, you drop in the chat, I'm done. I want you to share it in the, just copy it and put it on your WhatsApp status. Copy the link because this is a meeting that every single person must benefit from, and we want this to go far, and you can help us do that. Okay, I'm waiting. Just copy the link, invite a friend. You can even send it to the DM of a friend, okay, and tell them to come along. Okay. I believe our day went well. I want you to drop in the chat where you are joining us from, and even in your state. So let's say if you are in Ghana, Kumasi, Accra, or whichever country you are in, you drop where you are coming from. Can we do that in a minute before we start? Just let me know where you are joining us from. Beautiful. I see 14 of us. Okay, lovely. Metahim says I'm audible. Yoshana says shared. Beautiful. Deborah says I'm done. Beautiful. Method Hims is joining us from Ghana. I see you, Thomas. Okay, our guest is right in the background, and I'll be bringing him up soon. Okay, Ajwa says watching from Accra, Ghana. Beautiful. Bruce is also joining from Accra, Ghana. Yushana is joining from Kumasi. That's beautiful. Beautiful. So we are going to be starting very soon. And I would like to welcome all of you. I'm Dr. Benessa Jaman Prempe, and I'm a medical doctor and also the executive director of the Holistic Medic Network, shortened as HomeNet. And our mission is one that we seek to empower health professionals and students in the health space to live an empowered life in all aspects of their lives, right? We want them to have a holistic, well-balanced life, financially, societally, emotionally, spiritually, in every walk of your life. And that is our main mandate. Okay, so if you are hearing me and if you would love to be a part of HomeNet, I want to just drop HomeNet in the comment section and you will be contacted. Just drop HomeNet in the comment section if you would love to be a part of us. We meet every other Saturday on LinkedIn and also on our YouTube page right now between the hours of 6 to 8 p.m. GMT. So you can check the time equivalent for your zone. Okay, Dr. Fenehas is also on the call. He says he's joining from Accra, Ghana. I see Susie from Tema. Whoa, I love this. Let's get more people here. I'm seeing 12 and more people counting already. This is amazing. Deborah has dropped HomeNet. Beautiful. So Deborah will definitely communicate our link to you, okay, so that you get to join our page. Yes, it's for health professionals and students in the health space, but it's also open because the activities that we have are not just restricted to those in the health space. You could also benefit from it. So if you want to be part of it, just drop HomeNet, HOMENET, in the chat section, right? There's something I always love to see. Beautiful. I see 15 more people. Okay. There's something I always love to do anytime we come live is to give you the opportunity. We don't want this to be about us. We want to do this with you, right? So we are giving all of you the opportunity. Whatever you do at the moment, I want to just talk about it in the chat section. As I always say, you may never know who would come back to watch this meeting, right? Somebody may come and see your comments and would reach out to you for your product. So for if you sell any product or you render any service, just talk about it briefly in the comment section. And I believe that the people needed for your service will definitely contact you. So drop it. If you have social media handles, you can also drop them in the chat and let people reach out to your business or to whichever institution that you are a part of. This is a free publicity business page for all of you. I see that more of you are sharing, and I see 17 on the call. I'm expecting many, many more because today's meeting is one for the books. It's one that you need to hear about. Okay, so why did we go for this topic? I don't want to waste so much of our time so that we can go straight into it. I believe that insurance is one of the things that is least talked about when we are talking about financial security. That's why we decided to start this, to be able to help a lot of people make decisions about insurance. Oftentimes, when we ask people what they know about insurance, their idea or what they know about it is very limited, right? But this is going to help all of you to come to a point where you know exactly what insurance is about when we talk about the word insurance. In Ghana, our mindset about insurance is very ill. Most people don't really have a good experience with it, but we brought the very best and one of the trusted companies that we have here in our context, Ghana, in terms of insurance policies. And he'll be coming on board to talk to us about insurance and the policies available. You may think you are a student, so it may not apply to you, but don't worry. There are packages for everyone, from students to professionals to every single person. So just stick and stay with us, and you are going to have a beautiful time this evening. Our guest is Mr. Ernest Elom-Appel, and he's a financial consultant at Prudential Life Ghana. He helps people make decisions about their their wealth in terms of insurance policies, planning for their life now and even beyond, not just for themselves, but also for their families. He has been in this for a good amount of time and he has great expertise. He has been on our talk shows in terms of finances severally, and I believe this evening it's not going to be any exception. So if you are excited, as I am already, I want you to grab your pens, grab your notepad, and get ready so that you get to hear all that we have to share with you. So, giving honor to whom honor is due, with all excitement and all joy, I would like to bring up to the stage Mr. Ernest Elom-Appel. You're welcome.
Thank you. Thank you so much, Doc, for the opportunity to be here once more. If I'm counting correctly, I think this might be the fourth time you are bringing me on HomeNet. I think this might be the fourth time, if I'm counting correctly. And thank you so much, everyone who is here. Yes, Doc, you wanted to make an intervention. Please go ahead.
Oh yeah, I was just saying beautiful, and just want to spotlight some few people who have come on board, so that I just leave the stage to you to do all your magic this evening. Okay, so let me just spotlight our beautiful guests who keep coming in, and I'm so excited about that. Thank you, Susie. Thank you, Ajwa. Thank you, Bruce. Thank you, Shana. Thank you, Dr. Finihas. Dr. Finihas is one of our board members at HomeNet, and he's so instrumental to what we are doing. I don't know how I would have done this without him. So I'm glad to have you here every single time, Dr. Finihas. You are greatly cherished. Thank you so, so much. Okay, Yoshana says, I make vegan and gluten-free cakes and pastries to order, and vegan catering services in addition to practicing medicine. That's beautiful. So beautiful. Wow, we need you on HomeNet. You have to be part of HomeNet. Yes, let's connect and be part of HomeNet. Good. Okay, Thomas says, good to see my boss tonight. Okay, that's good. So since we are on board and we can see Mr. Ernest, I'm going to go up the screen at this point, and I'm going to allow our boys shine for the night. Over to you, sir.
Thank you once more, Doc. I was having a bit of a challenge with the slides, but I've shared it with Doc, and I'm sure Doc will put it in the appropriate places so that everyone can be with me on the same page as we go along. Um, so as I said earlier on, thank you so much, Doc. Thank you, HomeNet. Thank you, everybody who has made time this evening to be with us. Thank you so much. I don't take this for granted at all. I don't take it for granted at all. Because I am a Christian, I want to just make a very short, quick prayer before we go forward. If I were a Muslim, maybe I'll be able to pray the Islamic prayer, especially now that our brothers and sisters in Islam are celebrating. Unfortunately, I don't. So just a quick word of prayer in English. Father, in the name of Jesus, we ask your help tonight. We ask that your spirit will help us. We ask that as we talk about money and as we make decisions regarding money, we pray that your spirit will equip us. Give us wisdom to make the right decisions. Give us wisdom. Give us the help to be able to understand what we will be discussing tonight. In Jesus' name we pray. Amen. So, when we talk about insurance, first of all, the concept of insurance is a part of financial planning. For every human being that is earning an income, even if you are not earning an income, you are a student, definitely some money passes through your hands. It is important, it is prudent that you have some level of financial plan. It is important that you make some plan with the money. And it is important also that when you make the plans, there should be insurance in the mix somewhere. Because there are portions of your financial planning journey that only insurance can help. Are you getting me? So it is important as an extension of our conversations on financial planning that we look into insurance and we look at how we can take advantage of all the many benefits that insurance has for you and I. And so that is why this evening I am so happy to be here and to discuss these things with you. Keep in mind, as I said earlier on, that this is part of financial planning. This is not just a talk in the vacuum. We are not having a conversation in the vacuum. This is a conversation which is an extension of financial planning. I want you to bear that in mind as we go forward. And that is very, very, very important. Now, what we have seen on the Ghanaian market, just a bit of statistics. What we have seen on the Ghanaian market is that 90% of persons who are in the income bracket, persons who are earning an income, 90% of them are not insured. 90% of them, they are not insured. Some of them may have heard about insurance. Some of them may have had people's experiences with insurance. But what we've seen on the Ghanaian market is that 90% of the Ghanaian who is earning an income do not have an insurance. And that is why this conversation is very important. We will be looking at insurance products. We'll be looking at some of the myths. We'll be looking at what some of the things we have heard, whether they are true, whether they are not true. We'll be looking into things like that so that you are properly informed going forward. And this is very, very important. This is very, very, very important. Now, when we talk about insurance, insurance began many, many years in UK in the form of Noboa. If you are a farmer or you have a farming background, like I do a bit, not much, by the way, Noboa is a farming concept where, let's say, five of us, we all have farms. Maybe I have maize farm, somebody has groundnut farm, somebody has tiger nuts farm, somebody has sugarcane farm. Now, instead of going to my farm alone to go and work, I may not be able to accomplish much, even in a week. So, why don't five of us come together? Today, we go to my farm, we all help. The next day, we go to another person who has maybe sugarcane. The next time, we go to another person who maybe is farming groundnuts. So, Nobwa, we all put our hands together and we help. That was how the concept of insurance was bet. So we all bring money into a pool. When I need help, the pool supports me. When Dr. Bennis needs help, the pool supports her. When my brother Thomas, who I'm glad is here this evening, needs help, the pool supports him. Okay, so the whole concept of insurance came from what in Ghana here we call a Nobwa. People coming together to build a financial pool where they can support each other, especially those who are in need as they operate this pool. So this is how basically the concept of insurance came up many, many, many years ago in UK. Now, insurance has in insurance, we have two bits, two broad topics. We have general business, then we have life business. General has to do with things that are non-living. Okay, they are not about human life. It is about insuring a car, maybe insuring your house, maybe insuring your business. Uh, Maybe you have some things coming from China. You want to insure them so that if anything should happen to them on the high seas, you will not have been at the losing end. So these are what we call general business. Okay. Then we have what we call life business or life insurance, where the things you are insuring, the things in quotes that you are insuring, they have to do with human life. They have to do with human life. Now, recently, the conversation of insurance um, has naturally come up where we saw the fires in Kumasi, Edum, I believe, where the fire service personnel, the firefighters, were making the point that they are not insured. When I heard it, I was like, what? These people are brazing these fires, they are putting basically their life on the line, so to speak, and they are not covered by insurance. What are we doing as a nation? But whilst we wait for the nation to make such steps or to take such steps to cover, people who work not just in fire service, people who work in the military, people who work in the police, our medical doctors, our teachers, our parliamentarians, and so on and so forth. You and I can come into such a conversation where we see how we can take personal responsibility of our financial plans and our financial goals and make sure that in our financial planning toolbox, we have some bit of insurance in there. So that conversation has come up naturally for the past few days. And as I said, we have general, then we have life. Now, if you are here, you are running a business, maybe you sell in the market or you have parents who sell in the markets, please, it is important that you encourage them to have the store insured or the products or the goods that they are selling insured. It is important. You see, think about it. Just this about a few days ago, I was thinking, why is it that insurance companies they have the name plan on all their products? Think about it. Plan. They call it plan. It's so and so plan, so and so plan, this and this plan. Every insurance product that I know on the market, the last name on it, the surname is plan. It's funny. I was thinking about it just 3 days ago. It is because most people do not think about these things. Most people do not plan that if my shop got burnt, what will I do? If my things coming from China got perished on the high seas, what will I do? If, God forbid, I passed on my kids' education, what happens to that? How will they continue their education? If my mommy passed and my daddy passed, how will I raise money for the funeral? So naturally, we in Ghana or we Africans, we like to wait for things to happen, then we find a way. But that is not the best way. You need to plan. You need to plan. It is important that you plan. Nobody plans to be sick, but you need to plan that. So if I'm sick, what happens? What will I do? How will I raise cash? You understand? So it is important to note that insurance companies have the name plan in almost all their products. In fact, the surname of all insurance products is plan. So we want to have this conversation so that we can stimulate your mind for you to see the need to go for some of these plans. So as I was saying, if you have, you yourself, you have a shop, you have a business. As for cars, we won't talk about cars because in Ghana, if your car is not insured, the police will arrest you. So the other things you need to insure them, your house. You need to insure your house against burglary, against fire, and so on and so forth. So this is important. You need to insure the properties that you have. Okay. Then when we leave that and we go into life insurance, one of the products I want to encourage most of you to go for is health insurance. You see, the thing about hospital is that sometimes you can fall ill when you don't even have the money for hospital bills. You don't have the money. You're not prepared financially for the bills that come with visiting the hospital. Even though we in Prudential we don't do health, we don't do what is the name? Yes, health insurance. There are companies that I know, like Premier Health. Premier Health is doing a very good job with health insurance. I was looking into their package a few days ago. So they have three kinds of packages. Premier Health specifically, and I'm talking about health insurance now. They have a product for people who are below between 0 and 59, where they pay 81 Ghana cedis, and then they show you all the benefits. You may not be able to go into all the benefits. So for people who are between 0 and 59, you put them on plan. I think they pay about 81 Ghana cedis. Then persons who are between 60 and 69, they pay about 101 Ghana cedis. Then they show you the various benefits on that plan. Then our parents and our in-laws, and then our grandparents who are 70 plus, they pay about 121 Ghana cedis. And then they show you the various benefits that it comes with. As I said, we don't do this. We don't do health insurance in Prudential. But you can take advantage of that and get health insurance for yourself, get health insurance for your parents, get health insurance for your grandparents. I was talking to the manager of Melcom, the one who manages Melcom's fintechs. He was telling me late last year, he said, my mother is important to me and I don't know when she'll be ill and possibly I may not have the money. So I want to put her on health insurance so that anytime she's ill, whether I have money or not, she can get medical attention and she can be taken care of. So I want you to take very important, pay attention to health insurance, especially because you may not always have the money when you or your loved ones are ill. So that is that. Then the next one is what we do in Prudential. So now I'm coming to the products that we have. So a brief history. I don't know if Doc has shared the slides so that those of you who can follow if where you are, if you are a bit free to be able to open and follow if time allows, if the situation allows, please follow. Doc, please, have you been able to share the slides for us?
Yes, please. It's on the page.
Wonderful, wonderful. Thank you very much. So a brief history about Prudential. Prudential began in 1848. We began as a microfinance. That's how we began in London, 1848. Then, over the period, we decided to have financial plans for people in the middle income brackets. And then we grew from there. We spread, we became an insurance company. We spread to many parts in Asia. So if you take your phone now and you Google Prudential Asia, you will see our footprints all over Asia. Then we spread also to Africa. So currently we are in Europe, we are in Asia, and we are also in Africa. We are in 8 countries actually in Africa. Now, many of you are conversant with the Titanic story. So you see my second slide, you see the Titanic ship. You see it there. When the Titanic sank in 1912, many of you have seen the video. But many of you are not aware that when the Titanic sank, Prudential paid claims to persons who were part of the crew and then persons who were passengers. So I have here a newspaper in 1912 where we paid a claim back then of 12,834. Yes, 12,834. 12,834 euros. This is about 113 years ago. Now, the reason why I bring this in is, as Doc said a while ago, to tell you how credible we are and where we have come from as a business and as a company. So in 113 years ago, we were paying claims. During COVID, there were companies, investment companies, insurance companies who could not fulfill their financial obligations to their clients. We were paying. So I brought this here to make that point. Now, the next slide, do you have a financial plan? As I said earlier on, a financial plan basically is an arrangement on your part or a plan on your part where when situations come up along the way, you are able to squeeze out money and sort out issues that put a financial strain on your budgets. They put a financial demand on your budgets. So in short, basically that is a financial plan. Now, when most people think about financial plan, they think about bonds, they think about treasury bills, they think about investments, they think about savings, they think about emergency funds. However, there are things that only insurance can solve as far as financial planning is concerned. So the next thing we ask is, how strong is your financial plan? Because if you have a financial plan, you have an investment, you have bought bonds, you are even having investments abroad, or you are investing into cryptos or real estate, but you do not have insurance in the mix, it means that your financial plan is not strong. And that's why I asked, how strong is your financial plan? It is not strong. It is not strong. It means that one unfortunate situation can get you breaking into your bank or going into your investments, or even annulling your investment. Maybe you have an investment plan going, something came up, you need to annul it, you can't continue, you want to stop. Or you have a real estate, maybe you are building houses to sell, and then along the line an illness comes up, God forbid, and you don't have insurance. So what happens? You have to sell the property, and usually because it's an emergency, you will be selling it cheaper than the actual price of the building, simply because when you had a financial planning conversation with yourself or with your financial consultant or with somebody who knows about money and understands money, some way somehow the person did not remember to mention that you need to include insurance. So if you don't have insurance in the mix, your financial plan is not strong. And if you don't have financial plan at all, whereas for you don't even have insurance, you also don't have investments, you don't have anything real estate, you don't have anything as far as financial planning is concerned, it is not too late. That's why we are having this conversation. So if you look at the image I have here, financial plan or financial planning stands on two footings. Okay, one is on wealth building, the other is on protection. Wealth building basically is when you have a plan like an investment plan, a savings plan, because you can then take your savings and reinvest it. Okay, maybe you have bonds, maybe you have bought stocks in the stock exchange, or you have bought some shares from MTN, from Goil, and maybe from SIC or from Prudential, and so on and so forth. These are all wealth building strategies, and they are important. They are very, very, very important. Okay, they are very, very important. However, the next leg, as you can see in my image, is a protection plan. If there's no protection plan in your financial planning acumen, it's like somebody standing on one leg. The person is not safe. The person is standing on one leg, which is wealth creation or wealth building or wealth accumulation. But the other leg, which is protection bit, is missing, it's not there. And that is why the need has come for us to have this conversation this evening. So I'll talk about the wealth part first, then I'll go into the protection bit. Just follow along, please. And please note down your questions. If you have some questions, please note them down. I'll attend to them when I'm done and when I get those questions. So the first wealth plan I want to bring up is what we call education support plus plan. Now, the idea behind having an education plan is that the cost of education goes up by 10% every year. Let me paint the picture properly for you. Assuming your child will go to university in 10 years, assuming the cost of university education now is 40,000, assuming for 40,000, 40,000, 40,000, 40,000. Let's just make it 100,000. Let's make it 100,000 for the 4 years doing a degree program. Let's assume that it's 100,000 Ghana cedis. Okay. Even though your child is not yet in university, the cost is going to keep increasing every year. Remember, we said, assuming your child is entering university in 10 years. In 10 years, 100,000 would have multiplied by 10. And so, if somebody is paying 100,000 for 4 years now, you will have to pay 10, I believe, how much is that? Let me check this on my calculator quickly. Oh. Is that, I believe that's 10,000. Or, sorry, is it 100,000? Hold on, let me. My calculator. Okay. Okay, so this 100,000. Yes, so it's 1,000,000. So in 10 years, you will have to pay 1,000,000 Ghana cedis to be able to take your child through 4 years degree program. I hope you are following. It is this understanding that underpins the necessity for you to consider an education plan for your children. Now, somebody will say, I don't have children. Do I need to have an education plan? Yes, there's a way it still comes in handy even if you don't have children yet. And I'll speak to that and briefly. So the education support plus plan, the policy term is between 10 years and 25 years. Somebody might say 25 years, who would want to run an education plan for the child for 25 years? About 5 months ago, a pastor friend invited me to his house. He has 4 children. He said the last one is accident baby. He has 3 boys. Then the last one, they had not planned for it. Then they had a 4th child. He called me to the house. I think the child is probably in KG1. And he did a 20-year education plan for the child. He wants the plan to run for 20 whole years because the child is so little. So yes, there are people who would go for that long. So the policy term is between 10 years and 25 years. The premium, as in the monthly premium, is between 200 Ghana cedis and 10,000 Ghana cedis a month. It's a range. So what your pocket can afford, you let us know, then we take it from there. Then there's what we call embedded cover for 4 kids. It means that, you see, previously education plans did not have, education plans could not answer the question, what if the child I've covered is disabled along the way? Education plans previously were not able to answer for this, but thankfully Prudential has thought about this, and we have brought something that covers the children, against disability in future, God forbid. Then we have spouse rider. So spouse rider has been included in the policy, and it's optional, so you can cover your spouse also along the line, and you can cover your spouse, so that, God forbid, along the line, should, even though, let's say if I'm the one doing the policy, I've done it for my kids, but I want to cover my wife also. It's important. God forbid, if I pass on, my kids can continue school. God forbid, if my wife passes on, that shouldn't affect the kids' education. So we have something like that as well. Then we have the sum assured, which is 120 times of how much the person pays monthly. Okay, so it's between that and 240. Now, if you check well, whatever the person is paying, if you look at the 120, it means whatever the person is paying is being multiplied by 10 years. So in the event that policyholder passes on, God forbid, whatever they were paying can be multiplied by 10 years, like 10 years equivalents can be paid to the children or the family, so that the kids' education can continue. And 10 years is not the minimum. You can also have 20 years equivalents of how much the person pays monthly. And that's the 240 times monthly premium we have there in the slide. Then we are saying that because it's an educational plan, it should be um, it should be flexible. That's the word I was looking for. It should be flexible such that along the line, if the policyholder needs some money to add to some money to pay fees or buy something for the kids' education, they will be able to have that. So we are saying that from the third year, which means from the second year going, because from the second year you are entering the third year, we allow you to come and take part of the money to sort out the kids' education issues when that comes up. Then finally, we have 4% of investment premium. So the money that the person pays at the end of the policy term, we pay for, after we've paid all the interest and everything to the person, we also pay 4% of the amount to the policyholder, because one, they've thought about their child's education, two, they started the policy, three, they've seen the policy through. We pay that in addition. Now, I asked the question earlier, what if I'm not a parent? What if I'm not going to marry anytime soon? Can I still have an education plan? Yes. One, you can have it for your kids in future. It's possible you can do that. Or you can just have it because it's a flexible investment plan, because most investments will not allow you to come and touch the money along the way. But the educational plan or the education investment plan is built flexibly, so that along the line, if you needed some part of the money, you can actually come forward, walk into any of our offices and get some help financially. Then the next plan I want to talk about, remember we are still talking about the wealth plan. The next one is the PruWealth plan. The PruWealth plan, I have said it again and again that it is one of the best endowment plans in all of Africa. 2 weeks ago, I was at Atlantic. I was at the Atlantic Towers in airports, where I met this man who is an accountant and a banker, and he does other things. And I told him about the PruWealth plan. I told him we have one of the best plans in all of Africa. Then he said, "Do you know I'm a banker? Do you know I'm an accountant?" I said, "Yes." Then he kept on mentioning the things he does. I said, "I didn't know, but now that you are telling me, then it means this conversation is going to be interesting." So I began to break down the PruWealth plan to him. He said, "Wait, there's something like that here in Ghana?" I said, "Yes, there is." So God willing, on Thursday, the same place, so that we can complete the policy. He's going for, I think he's going for an 8-year plan where he's paying close to 3,000 a month. He's doing 500,000 Ghana cedis. So the benefits. This is one of the best endowment plans in Africa that provides a maturity benefit of sum assured. Now, there is a reason why this endowment plan has the name maturity benefit stroke sum assured. And the reason why this sum assured is here is because in normal investment plans, if something happens to the financial market or the financial climate, as we saw in the DDEP situation, people's money can take a hit. People can, like people who had bonds, monies that were supposed to be paid, let's say in 2025 or 2024, the government says, I can't pay, I can only pay in 2032, thereabouts. Okay. So when things go wrong with the financial market locally, people with financial plans or financial products that people have signed on to can be hit, can be affected. But there's a reason why here we set sum assured. It means no matter what, the money we have assured that we'll pay, you will pay. That's the meaning. That's why in my slide I made it maturity benefit stroke sum assured. It means that if we agree to pay you a 1 million, no matter what happens, we will pay that 1 million. Whatever happens with the international financial market or the local financial market, we will pay. We will come through with that obligation. And that's why we call it sum assured. No matter what happens, says will pay. And this is unlike any other investment plans or investment portfolios that we have on the Ghanaian market. We've seen it. We've seen it before. I mean, people had Data Bank and others. They didn't get their money. Some have. Some were told we'll give you part. Some were told we'll pay the money maybe in 5 years. Some don't know exactly when they will receive their money. And that is making a lot more people show interest recently in our proof of plan, because one of the guarantees we are giving you is that no matter what, the sum assured will be paid, the maturity amount will be paid, regardless of what happens. Then it also gives you cover for TPD. TPD simply means, so TPD, total permanent disability, is a term that we, the finance people, we use, and the medical people in the hospital also use. It's a situation where someone is ill for 6 months or more and cannot move around, cannot move about, whether they are hospitalized or they are home. It qualifies for what we call TPD. So there's a cover for TPD. If anything like that happens to the policyholder, we will look at the severity of it and we'll pay a percentage. If it is that severe, we'll have to pay the full 100% of the maturity amount. So even though the person took the plan for 5 years, and then let's say 2 years along the line, something happened and it is under TPD, we'll pay. We will pay that amount. So that is it. Then PWP provides extended cover for 5 years after maturity. What we are saying is after you've taken your money, let's say you went for a 1 million plan for 8 years. The 8 years is after you've taken your money. Prudential says we'll still cover you for 5 years. Within that 5 years, you are not paying a dime to us, but we'll cover you. We cover you for accidents, we cover you for TPD, and so on and so forth. Okay. Then the next thing I said, 100% of maturity benefit is guaranteed no matter what. Now, let me say this. Prudential Wealth Plan is not strong in terms of the dividends it gives you, in terms of the return on investment that it gives you. But it is very strong in terms of the fact that no matter what, whatever amount we have agreed to pay you or we have assured to pay you, we will pay. So we are saying that 100% of maturity benefit is guaranteed no matter what. Minimum entry age is 18, maximum entry age is 55. The terms available, as I said, you can have a 5-year plan, you can have an 8-year plan, you can have a 10-year plan, you can have a 12-year plan, or you can even have a 15-year plan. Now, the lower the term, the higher the monthly premium that you'll be paying. Okay. So if somebody is going for 15 years, okay, 12 years. Somebody's also going for 5 years. They are all going for 500,000 plan. They are all going for 500,000 plan. The one doing it for 12 years will be paying less than the one going for for the 5 years. Because obviously the one going for 5 years wants the money to be ready earlier. So you need to be willing to pay larger amounts monthly to be able to reach that destination quicker. So the Proof of Plan is a fantastic plan. I talk about it everywhere I go. I love the Proof of Plan. I absolutely love the Proof of Plan because of the fact that no matter what, whatever was promised will be paid. So that's one of the plans I really like you to consider. If you've had an investment that took a hit, that went sour, and you are discouraged, and even though you know you need to invest, you need to put your money somewhere for the money to grow, but you are unsure where, I recommend the Proof of Plan to you very, very strongly. Now, having dealt with the wealth part, now let's go to the protection part. Let's go to the protection. Now, when we say protection, we do not mean that we are able to, necessarily prevent, the unforeseens of life. When we say protection, we actually mean financial protection. We mean financial protection. For example, I spoke about when one's mother or father or in-laws have passed on. We cannot necessarily prevent that, but we can give you a financial belt or a financial shield or financial protection that makes sure that you have enough money to take care of the bills that go with funerals. So when we say protection, we actually mean financial protection. Financial protection. Keep that in mind as we go forward. Now, Doc said something earlier on. If you are in school and you earn something, I mean, you get something from your parents and family and friends to support you, you can have an insurance plan. The Prudent Life plan is designed such that anybody will be able to afford. Anybody and everybody will be able to afford. In fact, the money that you use for lunch, the money that you at work you go for lunch, that money, that 100 Ghana cedis or that 90 Ghana cedis, it's enough to do insurance, to have insurance for yourself. So the next thing I want us to talk about is the Prudent Life plan. The Prudent Life plan is one of the wonderful plans that we have here in Ghana that Prudential has designed. It comes with affordability. I mean, it is affordable. Anybody can do it. Even the money you use to buy, your lunch, you can use that to do this particular policy. And it comes with all kinds of amazing benefits to you. Let's go through that. The first cover it gives you is cover for critical illness. Cover for critical illness. Now, we have so many critical illnesses, but in Ghana, the commonest we've seen are cancer, kidney failure, heart issues, and stroke. These are the commonest ones. These are the commonest ones. And so we cover the policyholder on these things. There are more, actually. There are more. Few days ago, we heard of, I think, one journalist in Ghana I think he went to cover a program in Bono, his home region. And then somehow, gunpowder landed in his eyes. It's become a big issue in Ghana now. Everybody is discussing, was it intentional, was it not? I don't know if he has insurance, but if he did, insurance will provide money because that is an example of critical illness. Money will be made available so that he can be taken care of. He can be taken care of. And please, by the way, those of you who have followed the story, those who have not, according to me, he's had about 7 surgeries already. And they are prepping him for the 8th one. What I'm trying to say is that this is something that can happen to anybody. There's nobody who is immune to the unforeseens of life. Who would have known that this man who is going to cover an event, a festival in Bono, will come back with one eye gone? This can happen to anybody. And that is why we in Prudential, we've been so kind and so magnanimous to make sure that anybody can sign up on the Prudent Life plan. So there's cover for critical illness, There's cover for TPD, which we mentioned earlier on. We also give you free annual medical checkup with partner facilities. So we have facilities all over the country that we are partnered with that you can go and have medical checkup once every year. It is free. You're not paying anything. We'll send you a mail. You indicate you reply us or you respond to the mail which of the hospitals or the facilities are closest to you. They will give you a letter. You print it out. You go to the facility that you indicated that you want to go to. You show it to them. They will take care of you, run checks for you. It is absolutely free. The reason why we are doing this is because you see, the thing about life plans, personal life plans, is that if something happens to the policyholder, the insurance company pays a lot. We end up paying a lot. So we want to make sure that you are fine. You are not ill. We want to make sure that you are fine so that the monies that we need to pay, we will not have to pay those monies. It doesn't also mean that it can prevent it entirely, but we basically want to make sure that you, our dear and cherished clients, you are fine so that we will not leave things to chance for you to fall sick. Then we have to pay all those monies. You go and come, you are in the hospital and all that. So no. So we give you medical checkup free every year. Now, if the policyholder made no claims, Prudential Life Insurance Ghana will return all premiums paid at the end of the policy. Why is this important? This is important because when we came to Ghana in 2014 and up to date, every other life insurance company that gives you life insurance, they will return your money, that is 30% of it, if nothing happened at the end of the policy. The best was giving you 70% of all your money at the end of the policy if nothing happened. So officially, Prudential is the only one. Prudential is the only life insurance company, and I'm not afraid to say this. We are the only life insurance company that says that at the end of the policy term, if nothing bad happens, we will return all your money back to you. We are the only ones doing this currently in the markets. And so you can look at it, this life plan, you can look at it as a way of savings. Maybe it is difficult for you to discipline yourself to save. This will help you, develop a culture of savings, because that 200 Ghana, that 500 Ghana cedis, that 800 or that 1,000 Ghana cedis that you would have spent for things that were not really necessary, now you get to save them, and you also get insurance cover in addition. So we will return all the premiums to you at the end of the policy term if God be so good, nothing bad has happened. Then it also helps you to secure a loan. You see, when you are going for a loan, banks are not worried about how you will pay. Banks are worried more about what if he dies or what if she dies, who will pay? So one of the things they will look at, or one of the things the boxes they would like to tick in order to give you the money, is when you have life insurance. Because then they know that if the policyholder is no more, their money will be paid to them, and then the remaining can be paid to the beneficiaries or the next of kin. So some people applied for a loan in the bank, they didn't get it. And then, of course, the banks won't tell you why. But if you have life insurance, like the Prudent Life Plan, this will help you to be able to get loan facilities if you so wish from the banks. Now, how urgent is getting life insurance? Somebody will say, I am young, why do I need life insurance? Or I am working, or I am saving, or I have enough in my bank. Do I really need life insurance? Do I really need this Prudent Life Plan? Well, let me give you 2 or 3 stories. These are true stories, okay? These are very, very true stories. 2 years ago, a colleague of mine came from Lebanon, and he was ill. They took him to the hospital. Then they detected that his kidneys were failing. Her name is Irene. So my colleagues reached out to me, my GHS group. I went there and I tried raising cash for her. Of course, I was the first to pay, and others also joined. Started gathering money, trying to, get her money to run her checks and all that. So one evening I called and said, Irene, doctors, how much do they say they need? She said they need 200,000 Ghana cedis. So I asked her, how much do you have? She said she doesn't have that kind of amount. Wow. So we kept on trying to raise the money. We were speaking to other people to help. But of course, our money 2 years ago was nowhere close to the 200,000 that doctors needed to treat her. To cut a long story short, Irene passed on. She died. And I went to her hometown in the Volta region, and whatever money we had left, we gave it to the family. Think about it. Maybe that was not Irene's time. Maybe it's not her time, really. What made her die, I will not say is kidney failure, is because she didn't have 200,000 Ghana cedis. And she didn't have insurance either. So I tell people, if you have 200,000 Ghana cedis or 300,000 Ghana cedis, free money there, that money you are not using it for anything, then you don't need insurance, because if something comes, you can fall on that money. But if you don't have that kind of money sitting in the bank, idly, just sitting there, just sitting in the bank, idle, then you need to have life insurance. Irene didn't have it, and that's how come Irene died. They went and buried her. I was at the funeral myself, I was there. This doesn't have to happen to me. This doesn't have to happen to you. This doesn't have to be your story. And that is why Dr. Bennis and Hominet have organized this, so that we can have this conversation and encourage each other to have a personal life insurance plan. Another example I want to give you is my neighbor. Now, this is 2 weeks ago. This is just about 2 weeks ago. On Sunday, I had prepared and I was going to church. This my neighbor is very kind with he's very kind. He's very good to my children. And I had not seen him for about I hadn't seen him for about 2 to 3 weeks. So I asked the wife, I said, "Oh, where is Mr. Charles? Where's your husband?" Then she said, "Something happened. But you go to church and come. I'll tell you about it." I said, No. Let's discuss what happened. Then she said, the man has a tipper truck. He has this huge tipper truck he drives, and he has this spare driver. The car had a fault, so they tried to fix it. It was the battery. They were trying to work on the battery. Suddenly, the battery exploded. The battery exploded, and both of them, this my neighbor and the spare driver, they were hit in the face. Both of them were blind. They couldn't see immediately, so they rushed them to the hospital. The spare driver is fine. They've treated the eyes and all of that, giving medications. He's fine. But my neighbor cannot see in one eye up to now, as we speak right now. He can see in one eye, but the other eye cannot see. He can't see in the other eye. And I feel bad because I started that conversation with him last year to have life insurance. But sometimes when he's ready, I am busy, I'm not available. When I'm available, he is not. So we couldn't really get to conclude on that conversation. Now, something has happened that if we had done that plan for him, he would have had money to sort himself out if it is operational or whatever. So currently, the wife, they tell us that my wife and I went to check on them. We went to check on him and even prayed for him. And he tells us that they said there's an infection. They are treating it. They want to treat it and see. If they treat it and it's fine, then that's good. Otherwise, they may have to consider surgery. Okay, so my point is that this can happen to anybody. This was just 2 weeks ago story. As I said, we've gone to see him. We've gone to pray with him, actually, encourage him. The wife was telling me that he said that if he doesn't get well in the next few days, because they are two siblings, if he doesn't get well in the next few days, he's going to poison himself and kill himself. This is how serious these things are. If you are listening, if I had pressed him and put him on life insurance, money would have been available for him to be taken care of in this situation. And now he's considering suicide. This can happen to anybody, or it can happen to a doctor, it can happen to a nurse, it can happen to anybody at all. And the last example I want to give you on the urgency to have life insurance has to do with a nurse. So she's called Yayirame Ibrahim. Joy News has been carrying a GoFundMe campaign for her. She's a midwife. She's a midwife who currently needs 300,000 Ghana cedis for surgery. If you can see it in the slide. So Yayirame's plea for 300,000 Ghana cedis to fight brain cancer. She's dealing with brain cancer. She's a midwife. She's a nurse. She's a hospital worker. So there's no, I'm a doctor, I'm a nurse, I work in the lab, this can't get to me. No, it doesn't work that way. This can get to anybody, any of us. That is why we encourage you to have a financial plan and to make sure that you have a personal life insurance in that toolbox, in that financial toolbox. Planes are insured. The building you work in, most of them are insured. Church buildings are insured, mosques are insured, cars are insured, motorbikes are insured. What about our lives? Our lives should be insured as well against the unforeseen. So if you have the slide, they've put there a number where people can contribute and support this young lady who is dealing with brain cancer. If you can support, that'll be good. But beyond that, we need to have personal life insurance for ourselves. You need to have that for yourself. Not because you think it would happen, but because you just want to be sure that you don't have to go a begging should such things happen. Now, some people are saying that, oh, when it happens, my father will help, my mother will help, my uncle will help, my sister will help, my friend will help. The last time you needed just 2,000 to do something urgently, look at how many people you called and cast your mind back. How many people were able to help you? Most people, if you need 2,000, just 2,000 now, they will not be able to help you. No, they won't. So don't depend on friends helping. Don't depend on my auntie will help, my uncle will help. You will be surprised when it gets there. Just 2,000 the last time you needed. You didn't get it from anybody. So please make sure that when we are done with this, the question you are asking is, how much can I pay? What are the benefits if I'm paying this? So that we can show you how you can sign up.
Okay, Mr.
The
Ernest, please,
next,
I've sent you a message in the private chat.
okay, I'll check right away. Okay, noted. Thank you. The last one I want us to talk about is the farewell plan. Farewell plan can be for your parents, it can be for your mother, daddy, it can be for your in-laws, it can even be for the extended family. But this particular one can cover only 4 people. It can cover two parents and 2 in-laws. So the number of people it can cover is 4. What are the benefits? It is a special life insurance policy targeting the growing middle income class that helps finance the final expenses of a departed loved one. What we are saying is that when family people or departed loved ones, mama, daddy, mother-in-law, father-in-law, when they pass on, it imposes huge financial burden on us. And often it is not as if when death is coming, it knocks and tells you, get ready, I'm coming, oh, I'm coming, get ready. No. So you want to be prepared, knowing that eventually it will happen anyway. You want to be prepared. So that is it. Then it covers in-law up to 74 years. What it means is that if your parents are more than 74, we cannot cover them. However, even that, make sure you reach out to me. I'll show you what to do. It is important. If we can't cover you, I'll still show you what to do because at the end of the day, we want you to be financially prepared when that day comes. You have the next one. You have the option to choose cover level or sum assured ranging from 20,000 to 50,000. And this amount is for each parent. So if you have 2 parents, it can be 50,000 each or 20,000 each. The waiting period is 12 months. 12 months. Every insurance product has waiting period. The one on this one is 12 months. The next benefit is return of premium. That is, if 12 months is not up and the person you covered or the people you covered, they pass on, the premium, the part of the premium you pay that is allotted to them will be given back to you. Let's say you covered both parents, one passed on. The other one, can still be on the plan. However, the money you paid for the one who has passed before the waiting period will return that money to you. Then no claim cashback. We return 15% of all the money you have paid back to you every 3 years if the people you covered, nothing has happened to any of them. Then the next thing we have on this plan, which is unique to our policy, is that provided you have paid for 1 year, your policy never lapses. There are funeral plans, even if you paid for 10 years, if you stop paying along the line, you lose all your benefits. But on the ultimate premium farewell plan, that never happens, provided you have paid for 1 year. Even if you stop paying or financial issues or whatever the case, if you're not able to continue, your benefits are still intact. Okay. Then we also give you a voucher benefit. It basically means that we give you airtime. Then we also pay some money to you 3 consecutive months after the funeral, because we envisage that after funerals, people come back from their hometowns with almost dry pockets, almost empty pockets. So there's something we use to support you briefly. Finally, I like the maths. I like figures. I like to look at figures. So this is my last slide. This is my second to last, my last, second to last slide. So Mr. Eric Awotwe, and by the way, this is a client. Mr. Eric Awotwe has both parents alive. Mother is 57 and dad is 59. So I'm painting a scenario here. He signed up on our funeral plan and he pays 417 cedis monthly for a sum assured of 50,000 on each parent, apart from the other benefits. Basically, what I'm saying here is that this my client, who is an actual client, pays 417 for both parents, 50,000, 50,000 each. Now, assuming that Eric didn't want to sign up on this plan and he decided that he wants to save this 417 to himself because he's had some bad news about some insurance companies. He wants to save 417 every month and raise 100,000, because 50,000, 50,000 for each parent is 100,000. So he wants to save this money himself. How long will it take Eric to save 100,000 if he's saving 417 Ghana cedis every month? If you look at the calculation I have there, it will take him 19 years, 9 months. Now the question is, if 2 years down the line, he has not raised this 100,000 and any of the parents pass or both of them pass on, what happens? It means Eric is going to have to go for a loan or depend on people or call people or just hope that people come and do some about it, they'll come and support at the funeral. What if they don't? If they don't, that's how young people end up going into debt. And we are saying there's a far better way. Put them on an insurance plan and let us bear that burden for you. So that when that time comes, we will be the ones to look for the money and not you. Finally, the things we will require to sign you up on any of these plans, we need your name, your date of birth, your GPS address, your email, your phone number, your bank details, your signature, and a few more things. And then we are good to go. Thank you so much. Thank you so much. Thank you so much, Doc. Thank you so much, Doc. Thank you so much for listening, all of you. And thank you for the opportunity, Doc, once more.
Beautiful. Thank you so much. We are deeply, deeply grateful for the time and how well you spent all the energy explaining these things to us. At this point, we would like to take some questions. Okay. We'd like to take some questions. So let's drop our questions. I'm sure you should have some questions. Good. I'm seeing some questions already. I have a lot of questions, but I'm going to read what we have in the comments.
Trouble. I'm in trouble today.
So Dr. Phinehas wants to find out, he said a question about the education support plan. When you make a partial withdrawal, let's say once or twice, do you still receive the same amount for your sum assured?
Okay. So the thing about the education plan is that it has two components. It has the insurance part that covers the life of the parents, and it has the investment components. Now, remember that every investment, the interest is calculated per annum, which means at the end of the year, every form of investment, So yes, we allow you to make a partial withdrawal. But when you make a partial withdrawal, when at the end of the year, when we are calculating the interest per annum, we will calculate it over the amount that you have. So let's say you have first year, the money you paid first year, going into the second year, we did the calculation and added the interest to it. Then the second year also came. We did the calculation, we added it to the previous benefits, the previous interest, in addition to the new uh, uh, payments that were done. So if in the third year you are coming for partial withdrawal, yes, we allow that. But in that particular, at the end of that year, if we are calculating the interest, we'll calculate it over the money that is available. So if Kojo did not do partial withdrawal and Dr. Phineas did a partial withdrawal, and both Dr. Phineas and Kojo are both paying 1,000 Ghana cedis, Dr. Phineas will be making less interest compared to Kojo, because even though both of them are paying the same amount, at the end of the year, Kojo did not make a partial withdrawal. So when we are calculating the interest, he'll be making more as compared to Doctor who did a partial withdrawal from the investment portfolio of the policy. I hope that answers my question.
Oh, wow. Interesting. Dr. Phineas, I hope that answers the question. So it means that if you make a partial withdrawal, whatever amount you're going to take at the end is going to be reduced, because now the sum total is reduced from the partial withdrawal that you made. But if you do not touch the amounts, that means you're going to have a huge sum. So the denominator for the division is going to be higher. So in the end, you are going to get more, which I think is fair. Okay, he said perfect. I got that. So there's a second question as well from Dr. Phineas. Okay, he says that concerning the 100% return of premiums, okay, this is about the Prudential Life Plan, right? So is it concerning the 100% return of premiums? If no claims are made, would that be scraped off if the person goes for free annual checkup?
Okay, so when we say claim, the hospital is not part of the claim. The hospital it's like what to idea also. You bought something and we give you addendum. Because there are times when you buy something and they give you that into, so you can decide to say you don't want it. So there are people on the plan who may not go for the medical checkup, but they know they need a personal life plan. They don't go for the checkup. So
Okay.
doc, going for the medical checkup is not a claim. Claim is when there has been either critical illness or there has been total permanent disability. That's what we mean.
Oh, okay. Dr. Finney, I hope you got that as well. Okay, the last question, he says that lastly, about the ultimate premier farewell plan, is the no claim cashback automatic? That is, it returns automatically to the person's account after 3 years, or you have to apply for it?
Yes, you have to apply, because there are people who would intentionally let it be so that it can pile, let's say, for the 6th year.
Okay,
So that,
and get interest?
yes, because it's 3 years, that money is paid every 3 years. So some people can decide that, okay, the first 3 years I won't take it, the second 3 years, then I'll take the two of them.
But would that give them a higher interest then, because they decided to keep the first 3 years, or they still get the same amounts if they had taken it in the first 3 years?
They get the same amount, because the condition is 15% of all that you have paid in the first 3 years.
Oh, okay.
So it's a fixed calculation. We know how much you've paid the first 3 years. We know the 15% of it. If you want to come for it, fine. If you don't want to come for it, we'll let it be there for you. So when you are coming for it in the 6th year, it is a fixed amount that will pay. It doesn't increase over time, because it's 15% of all you have paid so far.
Okay. Good. Okay, he says, Grace, that's wonderful. Okay, there's a question from Elijah. Elijah says that what happens if within the given period of insurance one falls sick and monies are paid? Will one be given something like balance after maturity? I don't know if I get.
Yes, can you read the question again? Please read the question again.
Okay, so is it what happens if within the given period of insurance, one falls sick, and I don't know if you wanted to say, and monies are not paid.
Okay.
Like, come again with the question. I don't know if Mr. Ernest gets it. I'm not really getting.
Yes. I'm not getting it, but let me play the devil's advocate and answer the way she has asked the question, and then I'll answer the other side of it.
Okay.
I'll do the reverse as well.
Sure. That.
So if somebody, especially on the prudent life plan, remember it covers critical illness. So if 6 months down the line, because the waiting period is 6 months, if 6 months down the line, the policyholder has not been paying, then it means that there was no contract, because the contract is contingent upon you doing A and we do B. So if you are not doing A, we are not going to be able to do B for you. It's like a husband who says, I won't give housekeeping money, but when I come back from work, I expect to see food on the table. It doesn't work like that. So that is the first part. The second part is the other side, the reverse is that if the policyholder has paid premiums for the prudent life plan and the policyholder is ill into 6 months, yes, then the person can, 6 months or more, because that's the waiting period. The policyholder can come forward and show all the hospital, because we need hospital doctor report and all those things to show that indeed you are ill, what you are saying is true, and then yes, we'll pay whatever claim we have to pay to cap for the critical illness. Yes, we'll pay. I hope it's clear, Doc. Doc, you are on mute, so it's hard to hear you. It's hard to hear you, Doc. Oh. Hello, Doc. Hello, Doc. Oh, what's happening?
Please, can you hear me now?
Yes, it's fine now. It's fine now.
Okay, so I don't know if you're done with the question from Elijah. There's another one.
Yes. Let me hear the next one.
Hello.
Yes, let me hear the next one.
Okay, so from Valerie, once I find out that concerning the education plan, can I take out the mature sum even if I don't need it to pay educational fees? That's a very interesting.
Oh yes. So last Monday, there's this client who is building. He needed some money to top up to roof the building. It's an educational plan. He came and he took the money. There's no hard rule that says that the money has to be used for education necessarily. So yes, he or she is allowed to come and make partial withdrawal once he has need of it. Yes.
Okay, beautiful. I hope you can hear me clearly now. Okay, they say you can hear me now. Thank you, Valerie. Okay, so Elijah has another question. He said, is there 418 premium for a parent or both parties?
For a pay, okay, yes. So yes, good. That's a good question that comes up every now and then. People ask, is the 417, is it that you have to pay 417 for mother and 417 for father?
Yeah, or for both?
It's for both. That amount is covering both of them.
Oh, okay.
That money is covering both of them.
Okay.
And for that money, my client has a sum assured of 50,000 on each parent for the 417. Yes. And that's what makes it affordable and a good idea.
That's good. Okay, so there's another question from Yeshana again. It said about the funeral insurance plan. Is it possible to put in an insurance for parents who live in a foreign country by a foreigner living in Ghana? If yes, what will the process be to withdraw? So the parents are outside, but the person lives in Ghana and wants to make a funeral insurance plan for parents who are outside the country?
The person who asked that question, is it a he or a she?
I can tell.
Okay, that person,
Yoshana, let us know
that
in the chats.
yes, that person has the same sickness as myself, and I'll explain.
Mm,
My mother, my biological mother, is no more, but my stepmother, who raised me so well and took care of me. Sometimes I wonder, if my own mother was around, would she have been able to do some of the things my stepmother has done for me? She's a good woman. Now, my mother has traveled. She's not in Ghana. My stepmother, I mean, is not in Ghana, and I want to cover her. So that puts me in the same basket with the person who asked the question. The
okay.
answer is no. You cannot cover them whilst they are away. So I can't
Okay.
cover my mother. I can't cover her because she's not within the jurisdiction. But
Mm,
but once they come around, once they step in Ghana, even if it is for 30 minutes, you can cover them. When you finish covering them, they can go to wherever they want to go.
so it's like at the start of the policy, they have to be in the country, but subsequently they could have traveled.
Yes, at the point of insurance, the people you are covering should be within the country.
Okay, but not necessarily like let me phrase the question better. So they can be in the country for visiting, not necessarily to stay
Mhm.
for a long period, and it will still cover for them. They don't need to necessarily be, if they're in Ghana, they don't have to be Ghanaians. It can still cover for them.
Yes, once if they are
Okay.
they all we need is they should be here. So even if they are going to be in Ghana for 10 minutes,
It's
within
still
that 10
cover.
minutes, let's insure them. Then they can now go back to wherever they want to go to.
Okay. Interesting. I get
So
that now.
basically, that's what we are saying. They should be here at the time that we insure them. They should be in Ghana.
Okay. Okay.
Hmm.
Yoshana is a
Yes,
she, actually. So she
she
has
says she.
replied.
So yes, Yushana, you and I, we are in the same soup. I'm waiting for my mother to come down so I can insure her.
Okay. So Nanacho has a
Yes.
question. He said, please, can you go over the family plan again?
The family plan.
Yes, he said the one about investment for life for the parents.
Okay. So what we are basically saying is that it is not as if once you have living parents, it is not as if one day you are going to hear a knock on your door that get ready, your mother is about to die, your father is about to die, start making financial preparations. It's not that way. So for your own peace of mind and to make sure that there is no pressure on you, as some of us went through because we had not covered our parents then many years ago, put them on a plan. In fact,
Mm-hmm.
it makes financial sense, far more financial sense to cover them than for you not to, because when you don't cover them, when they pass on, the money you spend, the pressure it comes with, the pressure family exerts on you to go and bring the money, sometimes unbearable. When
Okay.
you cover them, what you are doing is you are telling us that Prudential, I want you to pay me 50,000 or 40,000 or 30,000 when my mother dies. For
Mm-hmm.
that burden I'm putting on your neck, how much do I need to pay you every month? It's like living in a room and paying rent. So
Mm-hmm.
you are offloading your financial risk to us. And for that financial risk that you are offloading to us, we are saying we are charging you, in the case of our train, 417 Ghana cedis a month. And
So
so the
it's more like
day,
you give them the target amount you want, and the division is made so that you know how much to pay per month.
yes, you give us how much you want. Maximum is 50,000. If you want more, then we have to give you another plan in addition. But the maximum for this particular plan is 50,000. We take
Okay.
their dates of birth, we run the calculation, we show you how much you need to pay every month.
Okay. Sure.
So
Okay.
the
Valerie.
dates, so the ages are used. If somebody here is signing up for their parents and their parents are younger than 59, 57, they will even be paying less.
Leah, because it's going to take
They'll be
more
paying
time.
less. Exactly.
Okay.
They are
Get
going
that.
to pay less. So that's
Okay.
how the farewell plan works.
Okay. So Valerie also has a question regarding the Pro Wealth plan. What is the minimum amount I can contribute monthly? And I think I also have a question about that. So with that plan too, is it like you have to let the institution know that this is how much I want to get at the end of this, then you calculate to let them know how much you can contribute, or the amount you decide to do on a monthly basis would influence how much you get at the end?
Okay, that's a good question. So there are three things that we need. We need to know how long you want the plan to run. That's the first thing. Then we
Okay.
also need to know how much you want at the end of the plan.
Okay.
Then we also need an idea of how much you are willing to put aside every month on the plan.
Okay.
These three will inform the calculation. So basically, we take your date of birth. It's an endowment plan. It's not like an investment. So it's an endowment. So we take your date of birth. We run the calculation based on these three information: how much you want, how long you want the plan to run, and how much you are looking at putting aside
Okay.
every month. Then we run the calculation for you. Then we show you. So for example, if Dr. Bennis, you want to do 1 million, and I like 1 million, please, I know most of us are young. Don't be afraid to go for a 1 million plan. It's not above you guys. It's not above you. If Dr. Bennis is going for a 1 million plan
Beno.
for, I like that. I like that. For, let's say for 8 years, and I am going for a 1 million plan for 5 years, because my
Pay more.
duration is shorter, I'm going to end up paying more.
Yeah.
And if Dr. Finihas is taking the same plan for 12 years, he is going to pay less than you.
Yeah.
So in short, we need your date of birth, and this information. How much do you want? How long do you want it? I put them in the app. I run the calculation. Then the app will tell me that this person will pay this amount every month.
Okay. But to Valerie's question, Valerie wanted to know the minimum amount for the Pro Wealth plan on a monthly basis.
If Valerie is willing to give me her date of birth, and how long she wants the plan to run, I can calculate for her right now, right here.
Okay. So, but can you go like, okay, I want to do 100 cedis a month, let's say for 5 years. Or you would have to first give the amount you want, then that would determine how much you'd pay.
Okay, let's make this simple. The things, okay, we need how long you want the plan to run. We also
Okay.
need to know, we also need your date of birth. Then
Uh,
how much you want. All this we put them into the app. Then so it's not something you can decide how much you want. Unlike the education plan, you
that
can
has.
decide that you want to do 500 a month.
Mm,
But
okay.
the wealth plan is really, really good. And we are bearing all the risk for you. So we need to have an idea of how old you are, how much you
Okay.
want, and when you want how long you want the plan to run. Then we will be able to tell you.
Okay.
That's how that one runs. We will tell you. And of
Okay.
course we can keep adjusting it. We can adjust it until we find a middle ground where it is affordable for your pocket. Then we can kickstart from there.
Beautiful. Okay. That's fine. Okay. So we have another question from Elijah. Elijah says, so the first question was that, say my sum assured is 5,000 cedis. I fall sick and payment of 1,000 cedis was paid upon maturity. Will I be given a balance of the fall? Okay, so that has to do with the institution then. Maybe you are assured 5,000 and the payment was not made in full.
Mm-hmm.
So that's his question, that he was assured 5,000 and fall sick and they pay only 1,000.
Okay.
So in
Okay.
that case,
So please go ahead.
so he paid, he's assured 5,000. He falls sick and there's a partial payment of 1,000 cedis from the plan. Maybe he needs it urgently for hospital bills, right? Then
Okay.
after the full maturity is due and he needs to get a 4,000, would he be given that balance?
Okay. If he's speaking about the critical illness component of the Prudent Life plan, then I would want to remind him that the plan covers only for critical illness. It doesn't cover headache, backache, malaria. No, it doesn't cover those things. We are
Okay.
covering the things that when we bring to the hospital, you the doctors tell us, that big amount of money. That is the kind that we cover. And
Okay.
if it is critical illness, once he has documentation from you, Dr. Benes, indicating that this person is dealing with either stroke or critical stroke or cancer or heart issues, we will not pay the money in bits. We'll pay the full amount.
You have to give it in full.
We'll give all the money. We'll pay all the money in full. That
Oh.
is on his plan. That is how much we're supposed to pay. We'll pay all the full amount.
Okay, beautiful.
We'll pay the full
Okay,
amount.
Dr. Finihas has another question. He said, when your policy status reads incepted, what exactly does that mean?
Incepted means that you have started paying your premiums. You have
Okay.
started paying because if you do a policy and you have not paid, on our side, it reads converted. It means you have signed up but you have not paid. And for as long as you have not paid, there's no contract, so to speak.
Okay.
So when it reads incepted, it means you have consummated the marriage. It's like a man and a woman who have gotten married and they've consummated the marriage.
Yeah.
Doc, I'll go there by all means, right? I like marriages being consummated. so Dr. Finihas, once you make your first payment, the status of your policy will be incepted. It means you have started paying your premiums.
Okay, beautiful. So thank you. So Valerie is giving you the figures now. 26th September 1998. She says she wants the plan to run 15 years and she wants $1 million. Okay. Whoa. Valerie, DM me. Okay. I'm your friend. After 15 years, let's be friends. Yeah. So Mr. Ennis will do the calculations for you.
Yes. Let me get the information again. The year again.
26 September 1998.
1998 September. How much does she want? How long does she want the plan to run?
15 years to run for 15 years, $1 million.
Okay. I'm coming. I'll get back pretty soon.
Sure.
Doc, can you hear me? Doc, can you hear me? Hello, Doc. Doc, can you hear me? Hello. Doc, can you hear me?
Yes, I can hear you.
Yes. She'll be paying 2,726 Ghana cedis.
Whoa. That's a lot.
That's how much she'll be paying. Yes, for 15 years. So if she wants to see, if she wants to see how beneficial it is, she can try 2,726. Let me do that calculation on my other phone, just to give her an idea of the profitability of this. So 2,726 times 12, which is 1 year, times 15. So if she was saving this money herself, she would have made 490,680 Ghana cedis.
Whoa.
So it means basically that in the next 15 years,
I can
whatever
double.
amount she's giving us, we are doubling the money for her. Yeah.
Wow.
We are doubling the money for her, plus there's a guarantee. I mean, there's guarantee that nothing will change that agreement. Nothing will change that agreement.
Interesting.
Yes.
Beautiful.
Nothing will come up. Nothing will come up for us to say, oh, because of this, we are unable to pay because of this, and that. No, 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 no.
Okay.
Yes.
Valerie, I don't know if you are still on. So that's it for yours. Yeah. Okay. So I love this. More and more questions are coming in. Wow. So Elijah says that, do you increase the premium by percentage every year, like some insurance companies do? Thank you very much for the insights. Many blessings.
Okay. Thank you too. Thank you too. For the wealth plan, because it's a wealth plan, because the agenda or the purpose is to build wealth, there's an automatic 10% increment in premium on the anniversary of the plan, every anniversary of the plan. So supposing we are in April now, if my brother who asked the question did the wealth plan that Valerie asked about in April now, next year April will be the anniversary, so we'll increase it by 10%. That one is automatic for the wealth plan.
So you are increasing the monthly payment by 10%.
Yes, it is automatic for the one is to grow money for you.
Okay. But in that case, then the
The
calculation of
maturity
the
also goes up accordingly.
okay. So I was just asking that in that case, then the total of the 400 and something thousand that we got will go higher because of the increments. Then
It will go, yes, it will go higher, but so also is the maturity benefits. Are you getting me?
no.
Okay, let me do this. So when I did the calculation for Valerie, and I've not forgotten the question, I'll come back to the question. When I did the calculation, I didn't apply the 10% because I didn't want it to confuse her. So I just the 1 million. But in reality, we will apply the 10%, then I can explain what I'm trying to say.
I didn't get you all, please. Hello?
So yes, can you hear me?
Yeah, I can hear you now. I think you went off for a bit.
When I apply the 10% salary to say that once you're increasing my premium by 10% every year, you expect more than $1 million Ghana cedis, right? It makes sense, Doc, right? Yes, that's exactly what happens. So instead of $1 million, 1.9 million, even on the 0.9,
Oh, okay.
which is
So,
almost 2, yes, almost 2 million Ghana cedis.
okay. Okay. Okay.
Now,
So because of the monthly
this
increment, you end up earning more.
Yes, annual increment, not monthly,
Annual, sorry.
annual increments. Yes, because of that, her maturity amount should also go up. For the wealth plan, that increment is automatic for the wealth plan.
Okay.
But for all the other plans, it is not automatic that we should increase your premium every year, as the person just asked. So that automatic is only for the wealth plan. But all the others, you can decide if you want it or if you want automatic increments or not. You can decide.
Okay. So for the others, you can actually decide which amount or percentage you would want as an increment.
Yes, or whether you don't even want an increment
Don't
at all.
want.
You want to stick with let's say 1,000 every month.
Oh, okay.
Yes.
Sure. But is there a way for the wealth plan? Is there a way to factor in the increment if the person still wants to make exactly $1 million without increasing, even though there's the annual increment, it can be factored into the monthly payment such that at the end of the 15 years, she's still getting the $1 million. I don't know if you get my question.
Yes, I do. So all I'll have to do is just adjust the figures in the app so that despite the 10% increment every year, he or she will still arrive at the 1 million Ghana cedis.
The 1 million. Okay.
Yes.
Beautiful. So Valerie, if you are listening, in case the $1 million is your target and maybe you are conflicted about having the annual increments for the next 15 years, it can be adjusted. I'm sure because then with that, she might pay a bit, I don't know, it will be
lower.
less.
Yes.
Yeah.
Yes, she'll start lower than 2,700. Yes. Yes, she'll start lower.
Okay. I think I'm going to take the last question. I'm hoping. Okay, Adjoa says she gets it now. Okay, Adjoa says, but wait, since we don't know their death day, will we keep paying till that day comes? If yes, our maximum is still 50,000.
Okay, that's another good question. That's another good one. Indeed, it is true that you don't know when. And that is why we are saying that even though you don't know when, you know it will eventually happen. So start it for them. However,
but she's just concerned that if, for example, someone starts when the parents are 40 and they are short of 50,000, let's say if they are going to pass on around 85 years, compared to someone who starts at 60 and the person passes over at 70. Yeah.
So it takes us back to the question somebody asked about the increments in the premium. Somebody can say, even if my parents will pass on 20 years from now, the amount I'm paying is what I want to keep paying. Remember, I told you you can decide. Remember, I said that earlier.
Yeah.
Yes. So somebody can say, even if it will happen in 20 years, the amount I'm paying now is what I want to keep paying. Don't increase it. In that case, the sum assured will also be fixed on the 50,000.
Oh, okay.
However, somebody who says increase it by 5% or 10% or so, the sum assured will also go up every year accordingly.
Okay.
So you decide what you want. So Adjoa can decide that 50,000 is good money now, but 50,000 may not be so good money in 20 years. So why don't you do 10% increment for me every year, so that by the time it eventually happens, the money would have been able to, yes, fight a bit of inflation and make sure I still have enough money to do what needs to be done. Yes, she has that option.
Okay. Beautiful. Okay. Okay, yeah. Dr. Finney, thanks for that. Okay, so you're going to take our last question. Dr. Finney wants to know that can one make changes to their original plan and increase the number of years with an increase in sum assured? For example, if the original plan is for 8 years to receive a sum assured of, say, 100,000, can you say to 5 years to receive a sum assured of $1 million?
Currently, no, but we are in talks with management to allow such adjustments. What, however, we can do now that that conversation has not gone through, is that if, let's say, somebody is going for 500,000 Ghana cedis, but then the person, let's say a year down the line, the person says, no, actually, I think I want $1 million. What is to adjust the inflation about the in the premium every year. Pick a figure that adjusts it so that by the end of the day, the person can still make $1 million. I don't know whether you are getting me. I don't know whether you are getting me, Doc.
Yes, I get you.
Yes, we can make that adjustment. But we, as I said, we are in talks with management to allow people to be
see
able
how
to
that could work. So does that apply for the wealth plan as well? Let's say you decided to
yes,
make
what I'm saying. Yes, what I'm saying applies to the wealth plan. The others can be adjusted. The others can be adjusted. The wealth plan is what is cast in stone for now.
The wealth plan can be adjusted if I got you well.
Yes, the wealth plan is what I'm saying, that we are still in talks with management to allow adjustments along the way if people so wish.
Sure.
But the others, maybe the life plan, you're allowed to say, okay, instead of 10 years, that is it. Or the education plan, instead of minimum 10 years, instead of the 10 years I went for, maybe I want 15 years. Yes, those ones, there's flexibility. It's the wealth plan that we are in talks with management to be able to allow people to make some amendments if they so wish along the
line. Okay. Beautiful. I like what EL says. He says that, wow, this is becoming more interesting. I tell you, I love the questions. I was also expecting these many diverse questions, but it shows that indeed we're following. And this meeting has been so fruitful. EL says we all have to sign up for the wealth plan, and also more importantly for the life plan. Yes, I think I'm starting to make my decisions well. Okay.
I agree.
Beautiful. I think at this point there are no further questions. Yes. Oh wow. Thank you all so much. We still have 14 people with us, even though I know we've exceeded our time a bit, but you are still here with us. That means we are giving you value for value, you know. So I'm so glad and honored that we got to do this today. We are over almost 2 hours into our meeting today, and I know this has been an incredible meeting. If you agree with me, let me know in the comments. Let me know that indeed it has been worth your time. I think even though this was supposed to be a one-time event, I'm just starting to think, but let's see. We would have deliberations and see how best to get this probably once every quarter to remind ourselves about some of these plans. Yes, I will drag Mr. Apple back here one of these days. So let's see how it goes. Wow. Dr. Fenha says, this was packed with value. Yes, I couldn't agree any less. Thanks, Mr. Apple. Thank you so much, Mr. Apple. Thank you. Yeah, let me get some more comments. Let's appreciate our guest for today. Today was not my typical me interviewing because I just wanted him to flow and give us all that he had to say. That's why it was not our typical Saturday Q&A, right? Because I want all of us to come on board and make sure that we start building our financial futures. Bruce said, awesome event. We need more. Okay. If you want us to do this again, at least once a quarter, drop it in the comments. Drop again in the comments. You want us to do it? I'm finding trouble for it. If people don't drop there again, we won't do this again. If you want us at least do it maybe once a quarter, drop again. If I don't see any again, that means people are fine with this event. That's fine. It's Bruce that has triggered this. Bruce is saying that he needs more. So I just want to know so that we don't call for the meeting and we are the only ones here. Today was good. I think we had a peak number of around 27 joining. That's good for a first time meeting. Dr. Phineas said again with 4 exclamation marks. Okay, Bruce says again. Okay, beautiful. Oh, that's so amazing. Sapel, thank you so much for your time. I know you're a busy person with work, with family. And for those of you who may not know, he's also into real estate, right? And if you also want to join him on that trail, he's open to partnerships and all that. So just contact him. You just can look him up on LinkedIn, NS Appel, right? You can look him up on LinkedIn and DM him on LinkedIn so that you can just talk to him about it, right? For those of you who know him, you know that he can design a whole flyer for your real estate and you can be on your way to cashing out some good money. Real estate, I tell people, what is your WhatsApp status for? You just post it there, send it to the DM of people and go and do your usual work. Don't worry, right? So you can just go about. Valerie says, thank you. Definitely worth the time. I'm so glad seeing this. Yoshana says, thank you, Mr. Pearl. May God bless you. And Najwa says, thank you. Yoshana says, again, with exclamation marks. So, boss, you are coming again at this point. The people said again. So, we'll definitely we'll think through it. Elijah says, yeah, it has been great. Larry said, Mr. Appel, kudos to you. Thank you so much. And I just said informative session. That is so beautiful. Okay, so we are going to be wrapping up now. Thank you so much for joining. I know today is a holiday. Some of you, those of you who enjoyed the holidays, finally it has come to an end. Some of us, whether holiday or not, it was still as it was. But you are now joining the workers of the land. So I believe this evening has been worth the time for you, and from the feedbacks coming. Valerie says again, Dr. Abek says, great session. I see Abeka. Wow, this is so beautiful. I'm getting so many feedbacks. That's good. So for those of you who are here and were able to join in, just tell a friend about this event. Let them know. Wow, we have Dr. Vanessa here with us. Says great one, guys. Beautiful. So tell a friend about it. As I said, you can reach out to Mr. Appel at any point in time. You can also connect with me on LinkedIn, Dr. Benny Sajman Prempe. So if you would want to directly get in touch with him, then he's open to answer all your questions. But most importantly, I want to see some of you sign up. Sign up, sign up, sign up is important. At the end of the day, it's not just the informative and the information and the talks. We need to make sure that you are starting this journey for real. So make sure that you sign up. Make sure that you sign up with him. And the best part before we go, we are having this talk on insurance, but next month we are going to be having a training session, a full training session on financial literacy. So be on the lookout for that. Flyers will be circulated soon. We had one training session on affiliate marketing. We'll be having one on financial literacy, so that as you earn the money, you know how to invest. You first know how to budget, how to save, how to invest, and how to multiply. Because it's not just enough to have money. You need to know how to get the money, maintain the money, multiply the money, right? So we're going to be teaching you that next month. And if you're excited about that, make sure that you're on the lookout for that. Follow us up on LinkedIn and you get all the information. Let me just spotlight a few comments coming in, then we will just run away from here. Elijah says, yes, as often as is possible. We'll try our best. We'll try our best to do that. Chris Love says, thanks so much for this meeting. Can't wait for more of these. Oh, beautiful. Okay. EL says, again, and again. So EL says, honestly, Dr. Benny, this has really exceeded my expectations. For I least expected the juicy information we just had tonight, and it's all because of some bad experience with some insurance companies. I know some of you have really had. I've always shunned from some of these insurance companies because I didn't have a personal experience, but someone close to me did, and it was so bad. Like at the end, it was like they should take the money if they want. They should just take the money. But that's why we brought one of the best and credible to come and talk to us. Chris Love says again and again. Oh, thank you guys so much. I'm really honored and I'm excited that you actually had this much value on today's meeting. We didn't just want it to be just a meeting for announcement, but to be worth your time. Before we sign off, if you have not subscribed to our YouTube page, I want you to do it right now. Just subscribe right now, okay? Let's keep this information going farther and farther and farther. Mr. Appel, if you have any last words for us, you can kindly let us know before we sign off.
Yes, so first of all, I want to thank Hominet. I want to thank everyone who, even though they should be using this time, this holiday period to rest or do other equally important stuff, they were still able to make time to be here. Thank you so much. Thank you so much. Then the last thing I'll say, when you reach out to me or we go into conversation, I want you to also keep in mind that there are discounts if you go for a plan where you want to pay annually for each of the amounts that we talked about. If you are going for a plan where you pay annually, you pay instead of paying each month, you want to pay annually, we'll give you a discount. We'll give you a discount of 2 months, so you end up paying 10 months in essence. If you are going for if you are going for a biannual, which is 6 months plan, we give you a discount of 1 month. So instead of 6 months, you pay 5 months. If you are going for quarterly payment term, we give you half. We give you this half of the amount as discount. So
Okay.
Because we are talking about financial planning, let's take advantage of all these small opportunities embedded in insurance products so that we can maximize what we are making, what we are taking home, and what we are receiving, the benefits we are receiving from these companies. So I just needed to, mention that
Yeah.
is also available for those who
Okay.
may want to get some discount and save on some money. Once again,
Sure.
thank you so much for the time and the
You
opportunity.
too so much. We have to be thanking you more and more. I see Dr. Magnus here. I said, yeah, see what I met. Oh, yeah. Amazing. You missed the good part, but thank you for joining in at this important point as we're about signing off. It's so amazing seeing you. Those of you who don't know Dr. Magnus, please tap on it and subscribe. She's doing some amazing work in the YouTube challenge as well. Just log in, subscribe to her page right now. She's such an amazing lady doing amazing things all over the world. EL says we are all in. Yeah. Says, thank you, Dr. Bennett, for I personally have been blessed beyond my imagination. And God richly bless you and your incredible team for making this possible. Thank you so much. I would really want to connect with you, EL. Just reach out to me on LinkedIn and let's talk. I know you're joining in from Denmark, but you stay through to the end. The Ghanaians have to come and take tips from, yeah, he's joining from Denmark, but you've stayed through to this point. Let's connect and let's see how we can get something from your end across board as well. Okay, thank you so much, Dr. Magnus. Thank you. He also has much appreciation. You're welcome. So thank you all so much. We are sorry for exceeding the time by 30 minutes, but from your reactions, I know it has been so worth the time. Would like to sign off today and definitely be on the lookout for all other things that are going to come up. And we are so glad to come your way every time. I'm Dr. Vanessa Prempe, the Executive Director of Holistic Medic Network HomeNet, and I was joined here today by our lovely, ever available, super fantastic Mr. Ernest Elimapel, Financial Consultant at Prudential Life Ghana. We will see you on our next event. Have a lovely evening. Bye-bye.